Welcome back to Optimum Live. Today, we're going to take a wander down a typical annual Optimum journey for us clients so that we know the support that we can get. So welcome back to Optimum Live. And I've got Mike Blaken with me. Hello, mate.
How you doing, Chris? All right?
Yeah, good. This is going to be an interesting one, this one. Obviously, I'm able to add my perspective as a client as well, albeit smaller than some of the different ones. But that's the beauty, is that you work from multiple million turnovers to, I don't know, 50 grand a year or whatever it might be, annual turnover. But you've got to manage all of us and work with us. And I've always said this, and I make no bones about saying it again. You guys are not just accountants. You are business advisors. It's a fair comment.
I think it's fair. Yeah, we would take it more than perhaps someone else would take it in the journey, and try to be more understanding and more sort of rounded in our approach to that specific client, rather than one size fits all. You got come and fit in our box and join our journey. We're trying to join your journey.
Yeah, because I think a key one, and again, evolution as well over time, but there's that whole, I certainly had no idea what the heck I was doing on that side. And it was so reassuring to have someone that wasn't just once a year, there's all the documents, and then you go and there's the output. Yeah. And I go, thank you.
That's it. It's trying to build up that confidence along the year, so that you understand what you're doing. Because again, if you have more understanding of the numbers, then when you're making those decisions on the day in front of, say, a supplier or a customer or something like that, you know, you have the confidence with that, rather than going, I'm not sure, and then maybe missing out on some opportunities just through hesitation.
Yeah. And that's includes the possibilities that it could open up, the things that we need to be aware of, what that actually means. You know, just because I see numbers there doesn't mean, and just because I'm on zero in my instance, other accounting packages are available, doesn't mean I'm able to go, oh, that's the picture, is it? Because there's lots of reports that can be run that maybe include things that skew the picture, whereas you guys are working with us in a much more holistic view. Is that?
And yeah,
is that a good word?
It's working what makes you tick with the business, what makes you maybe stress, what your concerns
Don't
are.
talk about stress.
I can't deal with all of it. But on the so some people worry about what their tax bill is running, and they want to be able to save it every month. Others want to know where they are on the journey of revenue growth. Others are working out what their overheads are costing, because it's all creeping, and are they capturing it all? And so to each client, I would say that nearly everyone is different slightly.
Yeah.
And the important bit for us is to understand what that is, so that we can design those reports that tick the box, and you can click the button and go, okay, yep, that serves what my concerns were, or what my stress was, or what woke me up last night. I can see this report. Okay, lovely. And if not, have the confidence to give us a shout if you're not getting the answer you wanted.
Yeah. And I mean, we're going to cover also things as the pictures that it paints, to see what options are available to us as we sort of grow and flex and whatever else happens, whether it's a positive growth, whether it's a government enforced change, whether it's a marketplace, enforced tweaking of things or whatever. So let's take this through in a logical structure. First point to cover: pre-year end review.
Yeah. So what we like to do is, say after 9 months of your year, maybe 3 VAT returns in, is pick up the figures, have a look at them. We'll do that internally first, and it may then be just an email that gets sent out to say everything's on track from where our previous conversations are, or you maybe taking a bit too much money out for the profits you've got. So if we end up getting to the end of the year in that situation, we might have a bit of a problem with a loan account, or with maybe a tax bill that's too high, or at the moment you've got excess. Perhaps we'll go through and work out you've actually got some excess profits, so maybe that enable you to make some pension contributions to save some tax bill. And we'll kind of give you some options. Some clients, it's literally a 2-line email that goes, everything's on track to what it has been for the last few years. And it might be just a reminder to get in contact with us if they want to discuss it further. Others are a lot more in depth, that lead to a meeting, and a proper sort of running through the business and the future plan. So everyone's different, and it's working out what works for each client.
Yeah.
But that review is always different for each client. Like I say, I've got one that's always about how much money they can put in their pension before the year's out, and another is to make sure that they haven't spent too much money on their loan account.
Yeah. No comment. Okay. As I'm scaling up, that's my constant challenge. And I have to say that is a prime example, is that I went into this, and I'm sure to some people will be screaming at the screen now, but I thought cash was king. It isn't at all, bizarrely. I was there going, yeah, but the cash is there. And it's like, no, if the profit's not there, it now means you're racking up this director's loan. And I've kind of learned that because of working with you guys. Yeah,
and cash isn't king if you're not paying people as well. And that's the thing, is some some bills that come along, you're incurring the cost of, so your profit's going down, but you may not have paid it out for, so a corporation tax bill's one, it's 9 months after the year. Yeah. So at the point of pay it, say in your first year, you go through the 12 months and then you pay it 9 months later. Well, actually at the point of paying your tax bill, you got 21 months. I'll just check the matter. 21 months of tax money in your bank account. So you got the money that sat there going, hello, spend me.
Yeah.
When actually you can't, because that's tax money. And that, again, those are all traps we fall in. So there's a lot with new businesses that we do. We talked about in other shows where we'll hold that hand. So there might be ones they want to know every month what their tax bill is, so they don't overspend until they got confidence with the numbers themselves. But the idea that we want to get towards is not spoon feeding every client exactly everything they need to think about. Is giving them the confidence that they can talk to us and they know when to ask us questions. We're provoking their thoughts in their head to ask us questions. Likewise, we're going through and we're going to do a review of every client and check things when we're doing the accounts and the tax planning and stuff. But the sweetest spot is to get clients to ask us the questions, but have that confidence to know that their question's going to be answered as well. Yeah. So whether that's a little WhatsApp group between a couple of us and the client, so quite often an email is becoming a bit like a letter, and there's a bit of a barrier because they want to do a bit of formality. Hi, Chris, hope you're doing well. And actually then it gets lost in the email account when maybe you want something quicker. It's not a perfect world, but I'll try and use WhatsApp so that you can maybe take a picture and go, oh, I'm just looking at this. What does this mean? Or, I'm concerned. Is there any chance you can send me a quick update? And if there's a couple of us on that group, it just enables a quick, maybe informal reply that just enables that information to come back and the client to get that bit of confidence to carry on.
Which could trigger a meeting.
Yeah, absolutely. Yeah. There's never a time where a client can ask for a meeting and we say no.
Yeah.
Right? We always want to meet with a client. Okay. Because we'll talk about it later, but face-to-face stuff, you get a better outcome for everyone. But in the meantime, if we can ask those bits along the way, and ask it easily and get the results back, then yeah.
And the key one that was jumping out of me again there was that as a client we're able to be confident that you're not just giving computer says answers, or what you use the phrase one size fits all, that it isn't that.
Yep.
Is that you are taking your knowledge, your experience, your skills, those numbers talk to you all the time kind of thing, that you're able to interpret them relevant to our business yesterday, today, and tomorrow.
That's it. Business will change.
Exactly.
Business changes all the time. And, I would say that you're a prime example. What you were doing last year was different to 2 years ago massively. To what you're going to be doing next year. We joked about where you come from with the studio and from your office over at Nexus to downstairs in our meeting rooms as a mobile sort of video studio to now what we got here. And that's in the space of 3 years.
Yeah.
And that's been changed and moved around and that's just one section of your business. You got staff here. Other clients could be growing, could have doubled in size, could have just one of the partners or directors might have had a family. So actually the business has changed because they need some more time restraint. They might have been doing 60 hours before and now they might be doing 70 because they don't want to go into no. But it's just like what
voice of experience.
I'm sorry, the phone's, I'm still on the phone. I'm still in the meeting. It's that change of that meeting, that those requirements are changing all the time. So if you're not keeping in touch, how do I know what's going on? But also, if you're not communicating with me to let me know what's happening, how am I supposed to know what the best thing is? And so again, it's not well, you didn't tell me, so therefore it's not. I also feel like I've got a bit of responsibility to get that information from you, which then comes from these meetings and bits like that, and a bit of a check-in and stuff. And the more that our team is growing, the more that we can introduce more members of the team that you can just go, actually, yeah, I'll just give them a ring. I'll just drop them a message and just say, oh, I was just thinking of doing this. A prime example comes from, I'm buying a new van. What should I do? Lease or this? And so we'll just go through and just give the benefits, pros and cons for each one. Yeah. Cash purchase, whether a hire purchase arrangement or a lease or something like that, and go, right, these are the benefits, these are the pros and cons. I can't make the decision for you of which one's right, because your interpretation of cash might be different to the person over here. Yeah. But these are the information, so you can make a judgment. You can make a decision on good information. Yeah. Rather than going, that one. That's the one I want.
Exactly that. And what's worse is that we're hearing stuff in news, or even worse, online. And it's just to sort of have that objective view with a knowledge of us and our business and our traits and everything else. It just means that no, it isn't always going to be the answer, but it is the information I need to make my educated decision.
There was an email from a client yesterday saying, oh, I've read such and such. It doesn't seem like it's worth now with an electric car in the business because the tax rates are going up.
Yeah.
And it's like, and the easy thing would have been to say, nah, it's probably not. Just leave it. Right. However, the right thing to do is to go back and go, well, hang on, let me just check again. What are you looking to get? What vehicle? New, second hand? Like, let's find out some facts first. Yeah. And then we can go, actually, for you, in your circumstance, actually it is. Or, no, you're right. First decision was right. We know we can go along that way, and we haven't got hindsight. Because I think with a lot of business owners, you look back and go, oh, if only I'd done something back then that was a better thing. But if you did at the time, so if you did at the making that decision, made the best decision based on the information you had at the time, then that's fine. If you look back and go, it was based on that, but I didn't ask. So actually, I didn't get some easy information to make a better decision. Then, you can kick yourself and go, that was the wrong thing. But I think you just got to just gather up information and make sure you're just making a good call on good info.
Which, and I am going to sort of slightly tweak the order here, because I think there's a logical flow to this, where we were talking about those face-to-face meetings. And I know, I'm always mindful that you might not be able to share all the details, but an example where it was a face-to-face meeting discussing things, and something suddenly could come out right at the end of a meeting.
Exactly that. And there's been several circumstances where, to some people, they feel they're just in having a coffee morning, perhaps with the accountant. Okay. But I can say 100% from my side, I'm always gathering information about just their situation, their plans for the future and bits like that, rather than it being 20 questions. So next year, what do you plan to do? What's this, right? That's not involving anyone. No one's buying into that approach. But if we're going through that process and asking that information, and it's the same with we talked about it on a new client meeting and stuff, where we're going along, filling out our idea of what the situation is going on just by having a conversation, just like this. But with these other examples, there's one, he didn't think it was part of he made a decision that was part of his personal finances, didn't think it had any interaction with the business, because we deal with the business and his tax return. But it was more, he was focusing around this bit. And we were just talking about different things, the future and planning. And he dropped out this one little bit about a pension payment he made. And if he hadn't mentioned it, I would never have known. And I could never have protected him from it. But he was actually walking down a path that was going to cost him a lot of money in tax.
Wow.
And he did what he thought was the best thing. But if I hadn't had that meeting, we would never have known. Now, they're the rare ones where you get a golden nugget for going, oh, that's the one, and you tell the story about it. But there's been several times where the bits have come out from those meetings right towards the end, or just in a most obscure way of finding it out. Because you pick up the phone, deal with what the problem was, or what the question was, and put the phone down.
It's done.
Whereas when you're sat together and you've got to finish a cup of tea together, you end up chatting about all sorts of stuff. And I'll aim to do that. I'll aim to go off down tangents, because you never know where it goes that feeds all the way back to, so what do we want from the business? Oh, now you said that, you want to go buy. And another example is a client that was making really good money was taking very little out. So I just kept topping up dividends, because they could, because I knew they talked about at some point they're going to do some work to the house. And they trusted me, went along, I explained what we're doing, but they weren't too worried. They had the money for the tax bills that I was making them pay a little bit more for each year than what they took. Yeah. And they just trusted me. Then they came to me and said, right, we're going to go spend 200 grand on the extension. I said, that's fine. I said, the money's already there to take out from the company, already taxed. But had we not been understanding that future journey for them, and they took 200 grand out in 1 year, that would have been loss of personal allowance, 40% tax virtually.
Yeah.
Massive, massive tax bill. We're in a build-up. They pay very little tax each year. Didn't even really kind of understand fully, but we knew that we were explaining it, doing what was right for them, doing what I would have done as well if I was in their circumstance.
Of course.
And then they put the extension in, and all of a sudden, it's all, the cash is there, it's all paid for, it's all done, everyone's happy. Really? And again, it's just those things of just having that conversation, going out, maybe go and see the client at their house. Like, I like to go and see a business because you know what's going on there.
Yeah.
You can have a walk around, you get to get a feel of what's going on. You might see something go, at some point they might have to do some repair works, like the trees at the back or something. You just gathering up things all the time. You go, okay, we've got to plan that in, we've got to plan that. New clients like a couple of weeks ago, go out, see them, see the new place they built. It's amazing. But having a conversation with them going, oh yeah, I noticed you cleared some trees. Oh yeah, we're going to put 3 more buildings in. Okay, so that's something for the future to be involved in. And it's just making sure we're part of the journey.
I agree. And I'm a huge advocate of that in general, which is what my company, Visual PR Productions, is based on, is if we did video content with a script, you will get exactly this. Whereas that whole scrap the script, we've got points that I know we need to cover. You know, this is an example of it, but allow the conversation to breathe. Yeah. And every time, whether it's podcast style episodes or whether it's, short feature videos or promo videos or whatever, by allowing it to breathe, you get nuggets that will come out in a conversation that never can cross my mind.
Yeah.
And it wouldn't have been in there if it was this rigid script. Now I'm listening to you going, that's exactly what you're doing. You're letting the relationship and the conversations flourish, and you're always listening. You're always taking it on board of what that could mean. 90% of it could be irrelevant, but suddenly a little bit that's going to help us now that you know it.
Yeah. And the 90% that might seem irrelevant as well is building up the relationship that builds up the confidence that we're humans, we're in business the same as you're in business, and we can help each other out.
Which is why carrying on the whole face-to-face meetings, yes, it's cool where something that just suddenly comes up in that conversation. But other examples that I had was that it gives me as a client that chance to go, I don't quite understand what you mean by that. And we can actually go into the details of it.
Yeah. And it's, I think those face-to-face meetings, I said it took new client, and I think they took it the right way. It's like, I can see the whites of your eyes. I can see whether you understand something from a reaction. You talk to someone and they glaze over a little bit, or they start just being a bit, disinterested in the conversation. I've either talking about something they're not worried about. Okay, so let's change it. Let's make it relevant to them.
Yep.
And it might be I'm talking about turnover and gross profit margin or something, and someone's going, I just couldn't care. Right? So find the thing that actually makes them relevant. Find the thing that makes them come to an accountancy meeting.
Yes.
Right? Because some of them turn up just because they think they have to. Some of them turn up because they go, well, actually, I would like to know that bit, but I'm a bit too nervous to tell him that I want to know what that means. That's for me to find out sometimes, or to build up the confidence to then, it might be for me to find out the first 2 or 3 meetings, but then after that you go, well, actually, this is fine. And I'll ask the questions, and again, the confidence goes.
Yeah.
Accountants quite often are seen as that sort of, they're one stage away from the tax man. I'm a bit nervous. And it's like, no, we're working together. We're trying to find the right solution for you.
You're on our side.
Yeah. We're trying to protect you from them by doing it right. Yeah. And we're trying to help you pay the right amount of tax, not too much or too little.
Yeah, no, I mean, that makes sense. Also picked up that, those face-to-face conversations that could be very limited in the fact that, okay, we just need to cover this, this and this. However, the ability for that to flourish can actually form, next year's plans or inspire next year's plans potentially even, and any necessities that might sort of go, look, okay, you need to be mindful that that's kind of going in the wrong direction or something.
It's that looking forward. So if we've done the year-end review 9 months through and we've gone, right, if you carry on like this is what your 12 months numbers are going to be. This is what your tax return's going to look like, tax bill's going to look like, right?
Yeah.
Now, in theory, if we got it fairly right and there's no anomalies that happen in that final 2-3 months that you can't predict, when we have the meeting, it should be, right, we predicted a 20 grand tax bill. We got a 19,500, right? So that's fine. So everything we talked about before has happened.
Yeah.
So now where are you going? So we've done the looking back bit, tick a box. Yeah, we've matched it, understand it, go through those numbers, but look forward. Where are we going? Where are we taking it to? What do you want to do with the business? And that might be, I want to grow more revenue. I want to put money in the pensions. I need to be able to, how am I going to finance that machine when it falls over? I think it's got about 12 months left of it.
I want new staff. I want new premises.
Or they're growing, and like for different clients. So that leads into some quarterly meetings that we do with some clients again, but which we'll do after, like maybe in a bit, but it's understanding what like the future bits are. What hurdles might you come up with the journey you're going to go along? So if the accountant's always looking backwards and literally turning their back to the future, you're going to walk into something and going, oh, cheers for the heads up. You could have helped me spot this, right? Whereas if we're looking forward together with open eyes going, well, actually, with the national insurance rates going up, with the wages going up, if you don't change this now, you're going to run out of money,
more, yeah.
Or you're going to make losses. You're not going to cover enough money to take home for the mortgage, or you're going to, and it's making sure that we're looking forward with open eyes.
Yeah. I don't think I'm saying anything wrong in this, is that equally I've heard stories where it can impact, let's say, capital purchases, not just in terms of planning, can I, can't I, but interestingly, occasionally it can be, do you know what, you're actually going to make too much profit. And I know you mentioned pensions being a great one, but you can actually turn around and go, right, you've been thinking about doing that, actually do it, because that then,
yeah, exactly.
Because what's the joke statement that business owners make? Here's to breaking even.
Yeah. Well, and a lot of them focus around trying to kill a tax bill and they'll spend £1 to save 25p of tax.
Right. Yeah.
And you're like, be a 75p out of pocket. Why
Which
spend
Rich Rich Matthews used to say, don't chase the dragon. If you got
a tax bill, you got a tax bill to pay. And I'm trying to explain to some clients that there's a baseline level of tax that you really need to pay to be able to pay for the mortgage over here. Yeah. And that's part of the journey of understanding that. So if you turn to a client and go, right, to pay your mortgage and your lifestyle, you have to have a 10 grand tax bill. That becomes the new break-even point.
Yes.
And go from there, because you've accepted it, right? Begrudgingly, but you've accepted it. But like with equipment and stuff, like part of like this mid-year review and stuff, or maybe like bigger bits of equipment aren't to be done at a pre-year-end review, right? Because you've got a month or 6 weeks before the year end to buy it, right?
I see.
It's a bit tight. You're going to make a rash decision. You're going to buy something quickly that maybe is the wrong thing, right? However, if we've started to have that discussion with the annual accounts, which may be 3 or 4 months after the year end, you're actually 6 months towards the next set. So whilst you're looking backwards to tick that one off, it's another point of that looking forward and going, right, if you're going to, like, say you wanted to buy some new media equipment and stuff like that, and it was 10 grand, right? You're not going to make it off the cuff, off out of nowhere, because the year end's coming up, right? You want a bit of time. You want to plan it. You want to make sure research the right kit. Yeah. It's the right one. It's the right time for the finance, the cash flow, and this and that. So that, I would say that's being more done on the next meeting.
Okay.
Unless someone goes, I want to, at the 9-year review, they might go, I want to buy a piece of kit. I want to buy a new van, right? Vans are a bit easier because they're like have them all the same, right?
Yeah.
And you go, well, that's fine. They've already got it in their mind they want to do it. I'm just reaffirming that if they do it before the year end, they're going to save the tax quicker.
Yes.
Right. So that happens quite a lot on that one. But if you're manufacturing and you're buying big kit, that's time to build in. That's not like just going down a pub and buying a pint. It's more, it's a bigger, planned event. So those are, I would say, is a longer process. So like, again, my friend's a joiner. He would talk about, like, he would buy a piece of machine maybe in the last month of the financial year. But he knew that 9 months ago that was probably going to happen.
Which is where I would envisage I would be, in the fact that, as you know, I'm constantly sort of evolving our equipment and setups and etc. And I'm kind of largely all over that, knowing, okay, I know that as soon as I can, this is what I want to get. But I agree is that if it's this big piece of plant, I mean, even down to basics, it ain't getting there in that short period of time either. And you probably aren't being invoiced until it's delivered. So it's like, well, actually that'll be in.
And it's also like we talked about over that Christmas at musings, I think it was, over that latest thoughts, right? But it's at that point. So whether it's formally written down, whether it's in the back of your mind, you've had the thought of like, there might be some equipment to buy there. And the pre-year end review might be enough to say, actually, you'll save the tax quicker if you do it now. So cash flow in the short term will be better. Yeah. Or it might be part of the annual accounts kind of meeting that's happening.
Yeah.
And so again, it's all different for each client, and it's just keeping that touch point to go. Hopefully a client will have the confidence to go in month 3 or 4 before we've even had one of the meetings to go, I'm thinking of this piece of kit, can you just let us know what we're thinking? And they're actually coming to us with the questions. Most clients do now. I don't find many that have gone, oh, by the way, I spent 100 grand on some kit. If it's all right. Like those days are hopefully going now where they're going, I'll just check it quickly. Even if it's just like a thumbs up on WhatsApp. They're like, yeah, you're all good, mate. Right? Like I'd rather that than just going, oh yeah, we've got an issue now.
Yeah, it's all too late now. It's not good. It's not good. I made this point, and I'm hoping that you're aware of it as well, is that by having those meetings, we're absorbing that information after every meeting. So we're becoming a little bit more empowered ourselves as the business owners. But one other is that you're providing that confidence for us to ask more questions. And of course, further down the line, those questions are probably even deeper and more technical than they would have been here because we've absorbed this. And so there's this, even that those meetings must be evolving, not just because the business is evolving, but because of what you're doing to us as the business owners in terms of that empowerment, that enrichment, that understanding, the confidence.
So you take the startup as an example. At the very first conversation you're having with them, you're talking about sort of tax, how the tax system works, corporation tax, VAT,
the basics all that, in inverted
how much they need to earn, getting them through there, and all the questions. Of, can I claim this expense? Yes, you can. No, you can't put the dog through or the whatever.
And in fairness,
you can't have the dog on the salary. That's it.
Some of them aren't as obvious as you might think, so that's really useful.
And like, it's ones with use of home allowances and stuff. It's different for every person depending on circumstances. Yeah. So again, it's going through those and giving information. And in the startups, VAT is quite an important one. When you're going to get over the VAT limit, don't go too long without talking to us. Let us keep an eye, right? But then I got some of those clients that I did all that work with at the start, lots of questions, lots of emails, maybe weekly, fortnightly emails, just what about this, what about that? But now they're in year 2 and 3, and it's like, so now how do I expand into a new territory? How do I fund the growth of 3 more staff? How's that? Because the business has gone on a different journey. They've nailed all the first bits, they've listened, they've taken it on, and now they're asking the next stage questions because the business is in a completely different place.
Yeah.
And it's great. We grow with you and provide more services or more support, or maybe we help you get some people in, like different bookkeepers or something, or finance. Like it could evolve any direction.
Yeah.
Depending on the business.
On a personal note, off script in a way, this even more is that it must be really rewarding for you. I'm sure there's not all of them are good news stories at all times, but generally speaking, it must be terrifically rewarding to be part of that journey.
Absolutely. It's why it's so enjoyable, because you're dealing with different clients in different industries and different stages of their journey.
Yeah.
It might be, I had one client retire.
I remember that one.
Just getting out of the business. Yeah. And that was like just to see him get where he needed to get to. That was brilliant, right?
Yeah.
And another one might be he's made his first 100 grand profit or something like that, or he hired his first person. He opened up his second cafe.
Yeah.
All sorts of different things. Yeah, absolutely. They talk about it downstairs. When I come out of a meeting, they can tell how it's gone.
Really?
Because I can come out and I'll be fluttering along and all happy and stuff. Fluttering, maybe not. But just happily coming out of a meeting high as a kite because I helped a client.
Yeah.
And I've seen them progress and I've seen them happy, and they're like, that's the bit I love.
Well, because a lot of us are there our business might not be because we're great business people, definitely not good accountants, but we are good at something that we've built a business around, and we might be amazing at that, but we've got to evolve and to watch that happen. But equally, you must get the opportunity, and again, don't necessarily name any names, but the opportunity to work with some business people that you kind of go, wow, they're good, and be inspired by the people that you work with as well.
You look at some of the journeys. We were sharing a journey of someone just before this, and you go, actually, I want more people. I want to help that person tell more people about their journey and their business offering of what they can help.
Yeah.
And if you could be, and that's why I try and help clients internally within my client base, that they go, oh, I need such and such person to help me. Oh, actually, I've got this business over here, I can help them. So therefore, that's two clients being helped out, because one that's got a problem solved and one who's got another client or customer.
Yeah.
And I'm always looking to just try and help people and help them get on their journey.
I just think that's so cool, because I'm not going to lie, accountancy could very easily be very mundane and boring if you literally just, not disrespectful, but crunch numbers.
Yeah.
To add all of this element to it, and I came into this taking it from the angle as a client that it is incredibly beneficial to have somebody that I can have these conversations with on an ongoing basis through the course of a year, yada, yada, yada. But for you to have that going, no, this is what we're doing. We're bringing it to life. We're advising, but we're also, you must be learning from stories that happen. Go, oh, do you know what? That's useful for.
Yeah. And there's always things you don't know.
Exactly.
The things I knew 5 years ago, if I knew it now, or if I knew 5 years ago what I know now, it would have helped me out loads back then.
Yep.
But everything's evolving, everything's changing, the world's changing at a fast pace.
People come up with new ideas, and you kind of go, oh my God, yeah, that would have actually helped over here. Yeah. Why didn't
I? And again, if you can help them out on the journey, it's great. It really is. I talk the journey. It sounds like very cliche and stuff, but it is. It is. So every client is different. Yeah. They've got a different outcome, a different objective, and at different stages of life, they'll change.
And people forget you're a business. Optimum Professional Services is a business, and that you're having to still be having those thoughts and decisions and conversations that you have to have.
That's at 2 o'clock in the morning job.
Yeah. Oh! But I know, because you guys as the partners are sort of like constantly have the meetings where you need to, because you're having to manage and grow and survive and everything else. So it's like going, that means you are speaking from a position of experience as well on that one. Other things that I know that you guys do, payroll review. Yeah,
and so some of this happens maybe without even clients realizing. So where, and this is more for directors. So this is director's salary rather than, more so than like reviewing your staff or something like that. It's more about looking at our client as the director, making sure they're getting the right salary. So it used to be very, very simple, because the national insurance for employers' rates threshold and employees' threshold was the same. Yep. So you could just do one. It's all very easy. Everyone got a stamp for state pension. Everyone paid the right amount of tax. Whereas now we got different levels for employers, where over £5,000 you pay national insurance as an employer's side, but less, but a higher threshold for employees. So you got a different level. You got state pension that you earn just under £7,000 that you need a salary for to trigger a qualifying salary stamp. You also, another thing that factors into it that people wouldn't necessarily realise that happens is if you've got childcare, if you've got children in childcare, you need to have a certain amount of earnings to be able to get the tax-free, either the tax-free childcare or some of the free hours.
Yep.
So if you're not on with a qualifying salary that's over a certain amount, that means, so therefore those clients might have to pay national insurance monthly. Some of them might do it at the end of year. So there's a whole different sort of mechanism that's happening. and we've got to go through and review and try and, so from those conversations we had, so I might know that a client's got a couple of kids in childcare, so I might be going, right, actually we know we got to do a higher one monthly because of that. And if we're not having those conversations, I can't feed this discussion a bit. So that tends to happen behind, because we don't want to send out pay slips to a director who's getting the same amount of money, who's taking one thing, salary's going through is different, because it just confuses things. Yeah. So it just happened, one of those tends to happen in the background. Liz runs that, and it just, but it's being monitored and being checked. But again, a point on that's possibly, I mentioned it to a couple of grandparents tonight to mention to their kids, in that, some people don't know that whilst they're paying for the childcare, if it's like an Ofsted registered place, you can actually get tax-free childcare. Where essentially you pay, if you earn in the right amount, you put money into the government pot. They add the tax money on, like your pension money gets topped up. Yeah. So if you put £1 in, they'll put 25p in. Okay. So you pay 80% of it, and then you can pay your childcare provider direct. And it's such a passing comment that I mentioned it once to a client just out offhand, because they were having like £400 or £500 a month for childcare fees. And I was like, oh, do you know you could do that? Didn't know that saved them £100, 125 quid a month. Wow. Just one bit like that. Okay. So I kind of just pass it as a comment. And then if they go and look it up and go, I don't think we do, like, what does it mean? They can then come back to me and I'll give them all the detail, rather than going, here's all the detail. It might or might not apply to you. It's just, again, send a little bit, provoke a thought, ask a question. They come back if it's relevant. Yeah. And the grandparents weren't sure if the kids actually, did that. Or not, so they took a note, mention it to them. I might not hear again because they go, yeah, Dad, or whatever. Or it's like, or they'll go, no, what the hell does that mean? Yeah. Again, it's little bits like that. Now, that's for an employee side of things. So hopefully, like, reason for mentioning it, anyone who's got employees could think, oh, actually, I'll just mention whether they're getting that. Again, if as an employer, they can let them know something that they didn't know before, pat on the back to employer, you're helping your staff out, okay, and trying to help out this whole navigate this world together. But also more for directors, that if they're doing it and we're not getting the right salaries in for whatever reason, they won't get that opportunity. Yeah, yeah. And then, and they talk about, for high earners between 100 and 125k, you've got this, where you lose a personal allowance and you pay a higher rate tax, but you also lose some of these childcare hours. So you could be paying, if everything's in the wrong point, if we did a tax return without understanding someone's circumstance, you could be paying a ridiculous amount of tax at that level of income, because it's all the knock-on effects. Like childcare, and that isn't really an accountant's thing, like most accountants would assume. But however, we have a direct consequence of another action like that. Yeah. So it's to, again, understand client's circumstances, situation, and that's all the way down to the kids. So a comment of going, how the kids, how many you got, what ages are they? Might seem like not just being nosy. Yeah, I am intrigued. I do I went for a meeting with the grandparents and the grandkids are all running around. So that's cool. They're all that's all part of life now. It's not very much like the kids get, no, this is a business meeting. Like those days are long gone, which is great, right? Yeah. But actually it's understanding it. Where is it? What is it? What ages are the kids? Not what is it? What ages are the kids? What is it? And stuff. Are they in childcare? Are they not? Are they in, are they at school now? That's fine. Do they do breakfast club? Oh, if it's an Ofsted breakfast club, maybe the you're paying for it, the tax-free childcare might be able to help. Yeah. So it's all those little bits that we're, again, mainly will provoke a thought on, or a question. We won't know everyone's circumstances and all the staff or anything like that. Absolutely not. No, that's too many. Well, because we don't know what we might be missing out on. Plus, you guys, of course, have the unenviable task of being all over all the things that change, relatively regularly in some cases. And it's like, well, what does that mean now? And we just carry on blissfully, especially being British. We never go and take what we're rightfully owed. Invariably, we don't ask, shouldn't I have this? It's like, well, actually, yes, go and get. You're working, you're putting it in. See what's there. Go and get it. And for some people, it might just be that bit to help them not take as much out of the business. If there's something there, just some allowance a bit to enable the business to grow.
Well, I clocked that from where you're saying like that 100 to 120,000 pounds is that we all kind of go, well, I want to earn more. But there might be that point that says, well, unless you're going to jump to there, you're actually better off staying below this threshold. And those are the equations that they're going, I don't know, I couldn't do it.
No, and some of it's a tick box, some of it's a bit more thought, some of it's how are we going to make it work there. And again, I keep saying it's all different. Every client is different.
Yeah.
Every circumstance, every personality, every desire of where they want to go in the next 2 or 3 years is different.
And I would imagine that has an impact in it, because if I don't know, if it's just a lifestyle company or whatever, then that's got to be treated very different to someone who's building something here.
Yeah.
And that's got to come into it. And so you need to be aware of all those things. So that's hence for some instances you have, ad hoc advice and support over the course of the year as well.
And that's it. And that should stem from the confidence having to send an email to the bookkeepers if it's a bookkeeping query or so. But like sometimes when we introduce different members of the team, so we got the bookkeeping team, the accounts team, tax, payroll, me, right? And some clients get, who do I contact, right? Yeah. Whoever comes to mind first sometimes, right? Don't go, I'm not sure who to send it to. I'm not going to send it. That makes me like really upset, because I want whoever you email in the team, they'll go, oh, that's not for me, but leave it with me. I'll find out. Or, Claire, this is your client. Could you just go back to them on this matter, right? They're not going to go, oh, it's not me. I'll delete it.
No,
like that's not the case.
Well, they might do, but they'd only do it once,
and they better hide it well.
Exactly. Yeah.
But like, the idea, like all of them are out there. They want to help a client. No one's here just for a paycheck. No one's here just to do. They're here because they want to be here. They enjoy being here. They enjoy looking after the clients. So if a client comes through and it's not their client or it's not their area of expertise, they'll either go and find the answer, or they'll pass it to the person it is to make sure that client gets the answer. Yeah. Right. So for a client, if any client's watching and going, yeah, I know, but they introduced me to a few people here. It's like, yeah, it's because we've got the areas of their niches, their areas of expertise, exactly. Right? So we've got someone on tax, team on accounts, team on bookkeeping and software, team on payroll, because that's their area. That's what they know.
That's why you recruited them, is that you're sort of adding that expertise into the company rather than someone trying to be a jack of all.
Exactly. So, and that's the thing. If we're all approachable, then you can just ask it. Sometimes I did have a client who had a bad run on a Friday, emailed one out of office, emailed another out of office. And then I luckily knocked on the door. I was like, oh yeah. It's all right. I'm here. I'm not on holiday.
Suitcase in the car because you were about to go.
Yeah. But that's the reality. But again, even if someone's not there, like, most of the time things are being monitored. There's enough people, like, if someone was sending emails and won't get a response, they phone up the line. Yeah. Call through, get through to us, right? I've always said to any of my clients, if you didn't happen to get hold of me, phone Debbie. She'll make sure I come back to you. She does. And she organizes it, because we look after a lot of clients, and there will be times where as humans we miss something, and we miss an email, we miss a phone call. But again, I've said to a client, if you think I've missed it, drop me a message. Yeah. Because if I have,
because it'll be innocent.
Yeah. If it is, it's purely because I've missed it. Because
I've seen how swamped you guys are. There's no getting away from that, which is, a victim of your own success kind of thing. And so therefore it will be.
And some of that is because we do this extra, most of that is because we do this extra stuff.
Yeah.
And so it is that victim of our own success where we want clients to ask us questions, but then so some mornings I'll wake up and go, they've asked a lot of questions overnight from those thoughts and stuff like that, right? Yeah. But that's fine. I'd rather that happening, because the more questions that ask, the more then that we can help out, and we can
especially with those Christmas musings as we covered in the previous episode.
And we joke, right? The Christmas just gone. Loads.
Really?
More than I've ever had. And It wasn't because, I doubt it. I'm going to say it's because of the video, because I'm sat with you. But I think it's the time that we're in. People are a little bit more cautious, conscious, maybe a bit more scared, right? So I had a lot of questions in, and I still go back to them, just deal with them, because I never want to see a client stressed over numbers, right? Where it can be avoided.
Well, especially as most of the stress is down to, I don't know what word I should use, so I'll go with naivety.
Uncertainty.
Yeah, because we kind of go, that doesn't look good. I don't quite know what that means. That just paints a bad picture. And yes, of course, it could be, yes, it is, but this is how we get out of it. And this is where you guys, with your expertise, you know, that you can do things with numbers or interpret the numbers.
And with any of it, we should be looking ahead as well.
Yeah.
So, yeah, down there, yeah, it's going to be rubbish. But we've got 12 months or 9 months. We've got 6 months to plan for it.
So let's get it on.
So let's start getting ahead of it. And it is just that constant back and forth.
And that's why I think it is important, you know, yes, that could get rocky, or actually this is going so well, we need to manage this as well. You know, where's this going? Don't just end up with this whopping great tax bill because of well done for your success. I'm going to take my loads of it. Yeah. Which is what it feels like, isn't it? It's planning, because that could be the next step of your growth and all of that. And then of course the final piece, I took it out and put it right to the end is that final year-end account that is put together, that determines things like tax return for the company and everything. And
that's and that comes part of that face-to-face meeting where it kind of pulls together everything that we thought was going to happen has happened and done, and we expected. There's no shocks. There's a tax bill coming up, but we already knew about it. The final thing might be produced a few months before the deadline. But it's based on something we've already discussed before. So there should be no shockers coming. It's just the formality of it that being done. I feel the emphasis of the year-end accounts function is changing, and that is becoming a bit of the formality. It's all the advice around it.
Right.
Because if you got your tax return in, I don't know, November for filing in January, right, that on the face of it wouldn't look very good because it's not short notice. However, we should have already known what the tax bills were back 9 months ago, or 12 months ago, or 18 months ago, because we know what journey you're on, what you're taking, and that's just becomes the formality. And
I had an example where I was like, well, why aren't they being filed now, like really early? You know, my financial year ended at the end of March. We met, I don't know, let's say April, May, whatever it happened to be. But we've had an instance where actually the director's loan account had gone up a bit, and it was like, right, do you know what? Because you get a period of grace after that time.
That 9-month window.
That you can bring it down, and they'll take that into consideration. And it's like, if you can go and do this, and that might have done things like, okay, in which case I'm not going and buying all these things. That'll have to wait, because I need to really focus on getting the profit margin up for 9 months by this value. And so therefore the accounts weren't actually, you know, revisited until say November. And then you get the final definitive view.
And the one thing that we'll always say is your accounts, every client is on the system, is on the tracker. So when it comes to the start of the month, and so like this month, 1st of Feb, Tracy notified round all the partners, just to let you know, these are the ones that got to be done by this month.
Right.
And then next week, right, these have been done, this is what's left. So there is always a radar. So with that, again, part of the risk is that we file the accounts early when we're thinking of maybe changing your loan account. It comes off the list. Whereas if we don't file it, it's always on the list that makes you go, we still got to have that conversation, Chris. And it might be November. We still got to have that conversation, right? It's still on the radar. It comes off the radar because it's filed. Then you kind of potentially miss the opportunity to go back. So again, it's one that from one side, it looks like, oh, they've forgotten about us. But the other side is there is always a deadline. You should see the email that go around. Why is this? Who's dealing with this? And it's like, yeah, that's me. That's right. I've got that one. Hang on. You haven't updated it. And we're always checking internally, going around, making sure that we...
So there's a full project management going on as well then.
For me, I'd hate for a set of accounts or a tax return to be filed late, because that's just amateur.
Absolutely.
Because we have systems. Everyone has systems, right? You know when it's our next monthly meeting here for this. The same as I know when your accounts, tax, confirmation statement is all due, all the deadlines, and we got the trackers that flash up when it's coming due or near and that. So sometimes it may look like, oh, it's been left till the last minute. Everyone is all under control and done. It might be just waiting for, oh, you did approve it over a phone, but can I get a signed copy back? Yeah, of course. But it might just be there just to make sure that we get that back, just to make sure that it happens on file and it's not missed. And then another year goes by and, oh, actually 3 years we haven't actually like that.
Yeah.
It's making sure so it's always on the list. that sort of thing, and on the tracker.
All makes sense. I think that sort of takes us. Have I missed anything out on the typical journey?
No, so that's the typical journey for most clients who do sort of like a standard Optimum service. It then branches into all different things after that if you need it to, which we talked about on other shows, of like the quarterly meetings, the planning, the forecast, management accounts and stuff. And that depends on a client's budget, a client's appetite for that sort of information. Some want it, some don't. Some start with, we'll just stick with the 2 meetings because that's one more than I've had before with a previous setup. And then others I go, well, actually, now you're on this one and you're getting value. We just drop 2 more in and all of a sudden we're meeting 4 times a year.
And that's the evolution, because I've said to you that I think that I might be getting close to that point that goes, look, I'm growing and I need to manage that growth and achieve that growth. Therefore, I think that we need some more. But that's because we've naturally turned into that. Also, picking up on another one is that, I know we did an episode on audit, but one of the big ones that I can see in my head that is beneficial with you guys is that, let's say I wanted to acquire, merge, whatever.
Yep.
There is all sorts of financial advice and auditing that needs to be done in that, and you guys can get involved in that process.
I did that in January.
Really?
So helped a client buy a business, helping one business break up, but another sort of split up as well, and just be involved in helping that and going through those scenarios. But yeah, on the business acquisition, we were part of it, doing the due diligence, doing the checks, talking it through, making sure that some of it was just that sense check of going, right, okay, there's all the excitement, because everyone gets excited for a new business, like, so buy a new piece of kit, get a new client, all the excitement, something new, is that sort of stop and check. So like with a client, typically what I'll do is slow it down for a moment and just go, right, so these are the basic points we're looking at. This is how much, this is what it's going to do, this is how long on paper it's looking to pay back. Is that, now take that sort of the adrenaline out from it. Is that, you still happy with that? That's the outcome you're expecting? Because it's the same, like if you go and sell, someone's selling to you, you're wrapped up in the journey, he's telling you all the things, or she's telling you all the things that's really excited, and you go, yes, this is brilliant, this is perfect for me. But we'll try and come along and just be that sort of sense check to go, is it exactly what you want? As in that. And then sometimes they go, oh, actually, no, I was getting wrapped up in this just a moment. And others, it's like, yeah, this is perfect. We are on this. And yeah, so we'll do all that, and that level is anything from just checking that the account's balanced to all the way through to checking contracts and stuff for them and that. So, and again, it was different. This client we worked with, it evolved through the actual purchase of what they wanted and how much and what it was. And then you again understand where the concern was. Okay, let's check that area a bit more, because the rest of it wasn't a concern. It was just that area. Yeah.
No, that makes sense. So plenty on whether it's a straightforward yearly journey all the way up to a zigzag all the way through that year.
Yep.
But in essence, the key one is communication, support, evolve together.
Yeah.
That's kind of the key takeaways I get from that.
Yeah.
Brilliant.
Don't expect the same thing. Keep changing it and moving forward.
Well, absolutely. For ourselves is that, my requirements have changed. My journey is constantly evolving, and roll with the punches. You guys do. Yeah. And definitely have those conversations. Nothing's a daft question. I know you guys have always told me that.
No, that's fine.
And that's a big one. Brilliant. Listen, Mike, thank you for that, mate.
Cheers,
Appreciate
Chris. That was good. It was good to talk it through.
Hope you've enjoyed that. I hope it makes sense. If it's sort of conjured up any thoughts, any questions, please reach out to the guys, optps.co.uk for the website. Get in touch, ask those questions and see whether you're an existing client and you sort of think, oh, actually, I could do with a bit more, or I've not taken full advantage. Whether you're not and that you want to sort of have conversations with the guys, do it. I'd definitely be an advocate of that one. So thank you, Mike.
Cheers,
Another
Chris.
episode of Optimum Live. We'll see you next time.